Hey, gang, happy Thursday. Welcome to the Charts and Coffee Show for December the 10th. So, hope everyone's doing well. Audio and video should be good. All right. Good morning. Good morning. Okay, so let's take a quick look at what we've got going on this morning in terms of the price movement. One of the things that I will be looking for today as I'm looking for opportunities in both the indices and in stocks is for the pit bull phenomena to perhaps put in a slightly lower low. Specifically today, I'm zooming in to show you what I'm talking about. One of the things that I talked about now those of you that are members of Sector Secrets, you probably remember this. We had a session yesterday where we talked about the fact that there are a number of stocks. I had about 8 in my journal that I really liked the look of for potential setups in a list of about 24 names. And the 8 that we looked at had what I call proximity. In other words, they were close to actually being triggered and they needed just a little bit more weakness. And the way in which the market closed yesterday, the way in which it behaved going into that last hour of the day suggested we might see lower lows. So those folks, what we talked about is, hey, let's wait. Let's see if we can put in a pit bull low today. And then we'll see if we can't get a setup, perhaps into the weekend, and look for a rally going into that normal third week of the month, going into options expiration. And after that very uneasy date of the December 14 electoral votes just kind of being often said. So those are some of the things that we had discussed, and you can see that here on the chart. So let's dive into this chart a little bit more. We're moving a little bit lower, which by the way, gang, we want to be opportunistic. That's something I remind myself all the time. How am I being opportunistic? I'm not looking at necessarily what I own. I'm looking at what I would like to own. I'm looking at what I'd like to trade. So think about being opportunistic, not staring at maybe a contraction of unrealized P&L. Gang, that ebb and flow is very normal. Get used to sort of some days being up a little bit, some days being down a little bit on your way to ultimately your target, right? There's a very well-worn analogy, but it applies when you look at all those routes for air travel. You get on a plane, you're not making a beeline to your destination. It's usually kind of a looping. You're not pointed nose to the city you want to land in. You're kind of taking this route there. And so I kind of think of like that with the markets. I'm not pointing right at that first profit target, expecting the market just to go right to my T1. I know that it might take the scenic route. So as long as I'm going to end up at my destination, well, that's all I care about. All right, so yeah, good old Marty Schwartz, the pit bull. Yes, we talked a little bit about the Market Wizards books. Jack Schwager. If you haven't read the market, there's about a gazillion of those wizard books out now, most of which I haven't read. The first 2 are brilliant. The Market Wizards and the New Market Wizards. Everyone's got Wizard now, but those first 2 are classics, and I would highly recommend checking those out. And yes, in the very first one, Marty Schwartz, the pit bull, was actually one of my favorite interviews. In fact, I think the book is still on my shelf here. It's called Pit Bull by Marty Schwartz, and it's probably one of my favorite trading books. Again, it's not about tactics. It's about mindset and a little bit of that trader's journey. Really good stuff. So do check those out. As the markets get a little wonky going into the holiday, having some good trading books is definitely going to be something that will help you stay productive, but not over engage the market. All right. So Janet asks, hey there, Janet, which of the simpler trading classes on futures would I recommend? Janet, the first thing I usually recommend for folks is, it depends on how you want to trade futures. Do you want to trade them end of day? And this is for every type of strategy, every type of trading. This is a really good place to start. And I'm just out of curiosity with all of us here in the room. Are you focused on short-term day trading? Kind of show of hands. Are y'all focused on short-term day trading? Are you more focused on longer term, say daily time frames? Or, what is your quote unquote favorite time frame? Now, I get asked this question a lot. What's your favorite time frame, Raghee? And I actually don't have one. I'm always looking for structure, right? But would most of you, so Jordan says day trading. Some folks say longer term, some folks say shorter term. Okay. So what you want to accomplish. So swing. Yes, so let me tackle swing. That's a really good, and thank you for mentioning swing there, Chris. Swing trading is the one to me that has no assignment to a particular time frame. So terrific sort of distinction between swing trading, day trading, and say daily time frame trading. When you're day trading, you're typically going to be in and out of the market by the end of the session. That's all that day trading means. It doesn't really assign a particular tactic. Let's say I'm going to look at this 1 minute time frame here. Day trading doesn't assign a particular tactic to this 1 minute chart of the NASDAQ. It just means that I'm going to get in and get out by the end of the session. That's all that it means. So because we want to accomplish all those things, the setup, the trigger, the follow through, the management in a very compact period of time, we'll typically gravitate to short-term time frames, 1 minute, 2 minute, 5 minute, maybe 15 minute, right? But it'll be a shorter time frame based on what it is that we want to accomplish. Swing trading, to me, doesn't have any assignment to a time frame. And I know swing trading is one of those words that I think most people mean we're going to be in the market to take advantage of a trend. I don't know. I've heard swing trading being defined as 3 to 5 days, which I frankly, in all due respect to anybody who kind of still, subscribes to that definition, it makes no sense, right? Swing trading is the swings in the market, right? The swings in the market, just like momentum trading is the momentum breakout or breakdown in the market. So swings, the word swing, to me is a synonym for retracements, bounces, pullbacks. And those particular strategies, as applied to swing trading, is really about finding a trend and engaging corrections in the trend, whether that's a bounce in a downtrend or a pullback in an uptrend. How long the trade takes to actually say, look, I'm going to find the right symbol, find the right level, assign the right stop, and then now I'm going to say the trade is going to take this amount of time. You guys realize how many fire-laden hoops you're having to jump through? I mean, it's a circus trick, right? So to me, swings are the corrections, and I'm glad that came up. So a lot of short term. Okay, so your time frame is going to reflect the amount of time you expect to be in the market. We don't know, right? We just don't know. So if I'm going to be in a trade overnight, let's just keep it really simple like that. If I'm going to be in a trade overnight, now I'm going to focus on a daily time frame. If I'm going to be day trading, you can see it right here. I used to be scanning 6, 8 time frames. Now I look at 2. A 1 minute when I'm day trading, it could be a 2 minute or it could be a 5. Just pick one short-term time frame and pick one longer-term time frame. So I'm either quote unquote swing trading, trend following on a daily, which I anticipate I will be doing pretty darn soon here. Gang, this pit bull low, as far as I'm concerned, is a nice underhand pitch to the Santa rally that we're going to see into the end of the year. I don't think there's a single analyst out there right now. I don't think there's a single trader or investor out there right now that doesn't think that we're going to see rallies into 2021. Because we've seen the way in which the market's interpreted and dealt with the uncertainty around the COVID, the lockdowns, the vaccine, who's going to get it, when's it going to be approved, and the market just continues to look ahead, look far, far ahead. A lot of folks are asking me, Rog, well, why the pullback right now? I'd say it's two things. And I'm I'm not going to make bets on this. What I'm going to do is I'm going to read what it is that people are being fed. And I think the bigger two biggest narratives right now that people are being fed that are kind of spooking them out, apart from the tendency for the market to want to put in a low in this pocket of the month, is LA's lockdown, Los Angeles is locked down, and the 14th of this month, this finality of this elections narrative, of this saga. I think there's those two things that are probably keeping the market just sort of a little hesitant. And then I think once we get those in the rearview mirror, mostly the 14th, we're going to start to see the market move higher again. But I think that lockdown in California definitely has traders wondering who's next, what's next. Is this the first domino kind of thing? So, the markets are going to take a break. Look at the way in which the IPO market's waking up again, gang. Right? Look at the way in which the IPO market's waking up again. Look at the way in which some of these stocks that are going to IPO. We've got Airbnb coming out. I mean, it's going to be priced at what, $68 a share? So it puts its valuation at $49 billion. You don't have IPOs in an unhealthy environment. These are pretty significant. Look at yesterday's IPO. I don't anticipate this market's going to continue to pull back. This is a very healthy correction. I think most of us are going to be very saddened if we don't take advantage of it. So as a day trader, gang, be cautious because this market, take a look at the 1 minute chart of the Dow. Here we are about, 29 minutes in front of the, what time is it? 18 minutes in front of the open, and this market's already taking a pretty good little dip to the downside. This is going to feed the pit bull low buyers, I think, really, really well. And I think that my patient day traders would do well to look for some intraday trend reversals to engage a market to the long side. At least that's definitely a tactic that I'll be looking at. All right, so really good mix of long-term and short-term. Again, the long-term, short-term is not a debate. You can do both, right? I do both. First 2 hours of the day, I focus on day trading. I have my day trading hat on. And then after 11:30, I'm done day trading. The second half of the day, last maybe 60 to 90 minutes of the day, I'll focus on daily timeframes, kind of going back to the swing or the overnight trading. So I compartmentalize, right? I'll do the day trading for a couple hours, and I'll focus about an hour to 90 minutes on my end of day trading. So don't try to do both at the same time, right? I think you're better off segmenting those two activities because they are very, very different. I think that we're going to see a little bit more weakness going into the open. Terrific. Let's find that pit bull low. I do want to still be a buyer intraday, and then I want to be a little bit more opportunistic, which was sort of the topic of today's charts and coffee. I want to be opportunistic going into the midday to close, meaning looking at potential buys. Do I ever take into account the 10-day average put call ratio? Didier, I do, but only in so much as I would take a look at the weather report to determine whether or not I need to wear a jacket, take an umbrella, or dress lightly, right? It's an environment. It's not a setup. It's not going to give me a particular trigger. It's not going to give me the timing, but it does give me an idea of the sentiment of the market. And that's a good thing to have. Sure, there's a lot of things that'll give you insight into sentiment. That would definitely be, one of them. I totally agree. I think that there's some, we could talk about put call ratios sometime in the future, but for now, just keep in mind that it's more like a weather report, right? It's more like a weather report. And so you know how you want to dress for the weather that day. That's the way I would look. So yes, I'm always vaguely aware of where it's sitting, but I'm not necessarily going to trade a certain way because of it. I might avoid certain types of trades because of it. So thanks for the question. Good stuff. There are plenty of analysts that have this market so wrong. Think this market's going to March lows. Oh, look, Nick, it's a good point. When COVID first came started to rear its ugly head in the markets, I was definitely one of those traders that thought, oh my gosh, we're gonna see that correction that, frankly, this market needs and has been waiting for. Terrific. I get to restructure my portfolio. I was very excited about it. Much like the V bottom of 2019, when the Federal Reserve came in and changed the messaging and the monetary policy and created that V bottom, something very similar happened in Q1 of 2020. It's a completely different conversation, but what the Federal Reserve did with the Treasury by buying stocks, let's face it, that's what they did. They bought stocks. And when they started buying stocks, that changed the paradigm. That changed what the market perceived the Fed was willing to do to keep the stock market up. When they started buying junk, the JNK ETF, high corporate yield, HYC, that changed the game, gang. And that was something that not 1 in 10 traders thought was something the Federal Reserve would do, or that it was even, quite frankly, legal. That's in the rearview mirror now. But you look at such a massive shift in psychology when people realize, oh, Federal Reserve and Treasury are willing to do that? Okay, cool. We're going to buy the stock market. You know, the Federal Reserve was expanding their balance sheet as of August of last year, of 19. Again, you can see how the central banks, not just in the US, but around the world, are supportive of the broader equity markets. And once that happened, I think a lot of traders, you look at, say, Stan Druckenmiller. For those of you that are not aware of Stan Druckenmiller, check out a great interview on YouTube. Real Vision did it. Great interview. Stanley Druckenmiller is, in my opinion, and many folks' opinion, the greatest trader who's ever lived. I'm not talking investors versus traders, but he is the greatest. He is the GOAT, right? And even he was looking at this market in a very specific way, Q1 and into Q2, and said, look, time to change the way the markets are behaving. Look at the struggle that Ray Dalio and Bridgewater have gone through when the central banks have completely changed the way in which business cycles, debt cycles, and macroeconomic cycles are behaving. So you won't hear me talk a lot about macro right now, because the only macro that matters is what is the central bank going to do. So yeah, I think, Nick, it depends on what a analyst subscribes to. And unless, and the analogy that I love to use, I don't know how many of you are MMA fans, UFC fans. If you were a fan of the UFC, like my husband and I were back in the 90s, you saw one style against another style, and then they duke it out, literally. And then what did you start to see? Hybrids of styles, wrestlers that knew jiu-jitsu, boxers that started to learn Muay Thai. So a slight hybrid. And then you look at today's MMA, and these fighters and their styles are almost indiscernible. You have fighters that can throw hands. You have fighters that have takedown defense. You've got to have a ground game. You might have one of those aspects that you're very, very good at, but you've got to have a well-rounded game. And I think analysts that are still stuck in the whole fundamental, valuation, macro versus technical analysis versus are going to be very much having lackluster performance, because they're stuck on that one style versus one style. That's so 1990. Okay. Now we've got to be these hybrid fighters, these hybrid traders. We've got to know and be able to combine it all to be well-rounded. And so I think that's where a lot of analysts still are. They're still stuck in that old, their old paradigms, and they're not willing to learn how to ground fight. They're not learning how to have a takedown defense, right? So yes, and thank you for betting shit. Today is the roll day. In fact, I have it up on my, here we go. We do have roll date. You can go to the cmegroup.com and take a look at all the roll dates. In fact, if you just go to the all-knowing, all-seeing Google, type in CME roll date, you'll see that today is the roll. Let me mention this for my traders out there. If you're trading, we tied that swing conversation, and you're looking at the daily time frames. If you're looking at the daily time frames, you're already thinking about March, and you have been for a little while. As you saw, let me show you here. As you saw I'm going to show you the S&P. It's going to be a little small. I apologize for this. I can't do anything about it, but it's a cool little plugin that I have running that I share with the members over at the Futures Room. This runs on TradeStation, and you'll see on the right, there's a little window of information. As you see the open interest slowly start to move out to March. Now, the open interest in December is still way more than March. But if you've been watching this, the volume and the open interest, most of the open interest has been increasing. And so for those of you that are wondering, Rod, can I still trade December as a day trader? Oh gosh, yes. I'll probably still trade December for a little while longer. Not much, but I'll probably still trade December for day trading. The volume is there. But if I want to have a trade that I don't have to get out of, or I think might take longer than the first notice date of the 18th of this month, then I've got to start looking at March or the H contract. Now, if you're playing the SPY or the DIA or the QQQ, you don't have to worry about this. But if you're trading the futures, absolutely, today's that roll date. So, well, keep this in mind as well. Yeah, you've got your roll date, but gang, I don't live and die by that roll date. I think rather than looking at the calendar or looking at your platform when it suddenly switches from Z to H, be more aware and more granularly aware of where the open interest trend is at, where the volume trend is at. And you can plot both of those on your chart. When the H starts to have an upswing, that's when you know you want to move over. But I'm fine with trading December for a little bit longer. Again, just be keenly aware of that first notice date, or when we want to be out of that March contract. Please don't get out on the 18th. Please start planning to get out by the 16th. That's something else you want to keep in mind. All right, gang. So that's it for me today. Thank you as always for joining me for Charts and Coffee. I'll see you tomorrow morning at 9 a.m., gang. All right. Have a good trading day. Be good to each other. I'll talk with you soon.